Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you. October the 1st, the year's 2020. Let's talk trading. It's time for the monthly open, but we're also going to do Walmal on Walmal Part 2. And just so you traders out there all know, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Trading is extremely risky. You can lose all of your money. So, if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, Walmal, you told me you wanted to talk to the traders some more.
Yeah, I just wanted to go and I know I kind of, in the beginning of the video yesterday, I kind of rambled a little bit, and I wanted to try to maybe set it up a little bit differently and just kind of give some actual rules as how I go and do it. Not necessarily how you should do it, but how I actually do it, just to make it maybe a little bit, more clear, a little bit easier to discern what I was trying to say. And I think what really spun it a little bit was that I saw that trade coming. And my anxiousness of wanting to get in on a trade, kind of got my attention a little bit off. And so I'm sorry about that. But anyway, and one of the things that I've noticed a couple of traders have said out on the forums is that, type of thing where, are you sure you're going to go and make enough pips on this, or, back testing and all those type of things. And, I just want to go and give you an idea this morning, if you've looked at the charts, we had a really, really big explosion, into the upside, and it covered everything from that. The charts had already run to the downside on the pound dollar. And the funny thing is that on the previous hour or so, what happened was I actually went short at one point in time, and what happened was I picked up like 2 or 3 pips. And that's all I got. I was on the short on that. And you say, well, that's not going to cover very much. Well, that's 2 or 3 pips that went into my pocket. And that's great, And then what happened was we had the explosion to the upside. Well, I was able to go and pick up 65 pips on that. And that's not typical, but that's what can happen. And so I just want to go and give some encouragement out there that, there are going to be some days, there are days where on my Walmal trades, at the end of the day, I'm at break even. Well, I may even be down on the Walmal side a little bit, but overall, statistically, I'm on the positive side. So I think that's important, to go and have that, let people know that that's kind of what happens, from time to time. You got to go and stick to something and, stick it all the way to the end, because statistics mean that, if something happens, 8 out of 10 times or 7 out of 10 times, well, what that means, it doesn't mean that you're going to win 7 in a row and then lose 3 in a row. It doesn't mean that, you're going to, what it very well could mean is that you could wind up actually losing 7 in a row. But then, because statistics, if they're true, and you've actually calculated them correctly, and you've actually observed them correctly, then you should have a really big, long winning streak. But you're not guaranteed that. All you are guaranteed is that over a long period of time, if the statistics are correct, that you'll get back to that place of equilibrium. So I want you to go and understand that. So you may take 2, 3 losses in a row, and I've taken 2, 3 losses in a row. I don't think I've ever taken, on the Walmal method, I don't think I've ever taken more than 3. But at the same time, I've also had taken 10, 15, 20 wins in a row too. So, that's just what happens statistically. Things just seem to go and work out that way. And you just got to keep that in mind. So in terms of actually taking these trades, what I do is I wait to about 5 minutes before the beginning of the next hour. And what I do is I write on a piece of paper. And I write down on a piece of paper where I think that hour is going to open up. Okay? And generally speaking, 5 minutes before the hour, unless the market's moving really crazy and really fast, you generally speaking know where it's going to open up. You know it's going to open up at some price or somewhere around the price within 10 pips or so. And then what I do is on the top part of the paper, I write down a number. That's where my break is going to be to the top side. And on the bottom part of the piece of paper, I write down where my break is to the bottom side. Early in the day, what I've done is I've written down, where significant price levels are. For instance, what was the open for the day? What was the close for the day from the previous day, if in case there was a gap? What was the, where is the beginning of the week? Where is the beginning of the month? Where is the beginning of the year? I write those numbers down in reference to where my prices are on the for where I think the trade is going to occur. Now, the great thing is that TheRumpledOne's got a wonderful indicator called HL5, and it does that all for you on the chart. And so you can, he sets it up like a GPS type, like a map, so you know exactly where you're at. Okay, so that's wonderful to do that. I'm a tactile type person. I need to physically write it down to get into my head. And that's part of me knowing who I am. But I write those numbers down. I write down where the open was and the close and the wicks, the top and bottom of the wicks were for the previous hour. And I've got all those numbers written down, and I've got them set in a ladder. That way I can, at a quick glance, I know exactly where price is right at this moment and where it is in relation to those other numbers. And why is that important? Well, for me, if I'm taking a trade, let's say right now we're sitting at 65, okay? If I'm looking, and let's pretend right now it's 5 minutes before the hour or 1 minute even before the hour, well, I'm looking for a trade at 70 or I'm looking for a trade at 60. But if I know that there's some type of big significant level, like the month open, let's say it's 60, or the week open at 60, that goes and adds some more weight to that break if that break occurs. So I just keep that in mind. I know where those things are. I know where those danger points are, and that helps make a decision. Do I take the trade or don't I take the trade? I look to the left. And when I look to the left, if I see that, hey, prices come down to 60 before, and every time it gets to 60, it sits there and bounces off it, bounces off it, bounces off of it, well, I'm going to go and say, you know what? That's dangerous to get in right at 60. Maybe I go and wait to get in at 59 instead. I look at those things. Like, you got to look at to the left. Now I know that TheRumpledOne says be a trained monkey, just jump in, and you know what? Even if you do that, you will be successful. But I think for me anyway, I become I think when you do it that way, you could probably win. I haven't gone back and looked at statistics, but you probably win 55% of the time, 60% of the time. But I know that when I go and put those other things in there to go and help myself, and it actually brings my winning rate up. The other thing it does for me is this. A lot of times you go and get down to that 60, and you're going to break that 60. I jump in. Well, if I know in the past it's been bounced off that 4 or 5 pips, well, there's a good chance, even if it's going to break to 60 this time, it's going to bounce off that 5 or 6 pips. And now I've jumped into a trade, and it immediately goes against me, and I'm sitting underwater by 5 or 6 pips. And that's not a pleasant place to be. And the next thing you know, you're sitting at that, I'm already down underwater 5 or 6 pips, maybe I should get out of this trade. And maybe you should. Maybe you shouldn't. I don't know. You know what I'm going to do? I'm going to go and wait. I'm going to wait for that second attempt at it. I'm going to wait to see if maybe it breaks it by a little bit. And yeah, I won't make as many pips as TheRumpledOne would just go and just jumping in, but I eliminate a lot of that pain. And with the Walmal method, there is going to be some pain, because that's just reality. Markets move. But the markets move up, then they move down. And it breathes. It's almost like a living organism. It goes up and down, up and down, up and down. And what you're doing is, when it gets to that line, you're taking a break on that breath down. You're taking that trade, but it's going to be a breath in the upward direction as well. Okay, well, that's fine. That's part of trading. That's what's going to happen. And then at that point, you need to go and implement whatever your trading rules are for your exit plan. And like I had said yesterday, and I'll say it again, that's where I implement my 10-5-1-3-3. And what that basically means is if I go and make 3 pips, if I'm positive by 3 pips, I immediately move my stop to -3. I'm not willing to lose more than 3 pips on that, because that means it's swung 6 pips against me. So you know what? I'm going to take a loss of 3 pips and live to trade another day. And sometimes that happens. There have been times where I've lost 3-4 trades in a row like that, where I've taken 3 pip, 3 pip, 3 pip. And the next thing you know, you're down 9 pips or 10 pips with 9, 10, maybe even 12 pips for the day at that point in time. But that's better than going and getting wiggled out, or going through a lot of pain, or having the thing run against you and hitting your stop of 10 pips, and you do that multiple times, and now you're not down 10 pips, you may be down 20 pips or 30 pips, depending on how it wiggled you out. So that's why I have that protection in there. Yet I allow it to go as much as 3 pips against me, because a lot of times what I'll see is it'll cross, let's say we'll cross into the 60 on the downside. What I'll see it do, it crosses the 60 to the downside, and it runs back up 2 pips, 3 pips, and now I'm underwater by 1 or 2 pips, and then it turns around and like a fury, it takes off back down to the downside, and now I'm able to get in and get my profit. So I want to give it a little room to go and breathe. Now the 10-5-1 part of it is, well, once I start moving up, and if you watch yesterday's video and you see I spoke through the trade. As I was in that trade, I spoke through it and how it was working. Okay, I went and actually said, okay, we hit 3 pips. Okay, move my stop loss to -3. Okay, we hit 5 pips, 6 pips, move my stop loss to break even +1. Okay, we've hit 10 pips. I've moved my stop loss to +5. Okay, we're up to 15. I've moved my stop loss to 10. Okay, we went up to 18 pips. And then I think 17 or 18 pips, something like that. And then I saw it come back down, and I think I jumped out at 15 pips yesterday on that trade. Because, you know, it would have been nice, because I could have probably picked up, if I recall correctly, could have picked up 20 or more pips on that trade if I stayed in. But I'm looking at it from the perspective of, I'm looking to make 10 pips per trade. I've already made, 150%, meaning I've made my 10 pips plus another 5 pips. This thing very easily could go, we move very quickly 15 pips up. And when something moves up quickly 15 pips, it very easily could have turned around on me and ran 15 pips in the other direction. And, which means I would have gotten out with just +5 as opposed to, the +15 that I had. That was the reason for that decision. So I think I wanted to go and explain it this way, just because that way you can go and see the methodic method of doing it. And that's the whole thing. It's sort of, you got to be, I agree with TRO in this and that, is you got to be a monkey. And in the sense that you do it, you collect your bananas, you do it, collect your bananas. I like to go and say, what you do is you wash, you rinse, you repeat. Wash, rinse, repeat. And you just keep on doing it over and over again, and you follow your rules. And if you follow your rules, as long as your rules make sense, you will make money. So what you need to do is go out there and trade. You need to go out there, put some real money on the line. Once you get the mechanics of your platform down, and figure out what your rules are, because you're different than me, you're different than TRO is, and so what your rules may be different than mine. You may implement my rules, and just because of differences in personality, you may not make money. You may type of thing where you may hesitate where I wouldn't hesitate, or maybe I hesitate where you don't hesitate. And that's why it's important to go and get your rules down on paper. I was talking to a trader yesterday, in fact, and I said to him, you need to get everything about this down. And he said to me, well, why would I need to do that? I know what I'm doing, and my answer to him is that, could you take what you've written down so far and give it to somebody and said, give me $100,000 so I can invest it in this trading business? And his response was, well, no, of course not, because, they wouldn't accept that. And I said, well, why don't you have those rules? Why don't you have those things in place? Why don't you have that complete trading plan down? And he said to me, well, I'm not looking to get $100,000. I said, oh, yes, you are. What do you mean? And I said, you're going and looking to invest your hard-earned money. And in fact, in one sense, that's worth more than somebody else's money.
Yeah.
Because you're the one that's out of your pocket.
Yeah, and you know what? The fastest 15 minutes in trading has gone by. I want to point something out to the boys and girls and non-binary traders. We're looking at a 5-minute chart, and you see price here has already crossed the line, then it got here. Well, this is the normal long line. Well, it's already moved this. Don't expect it to keep moving even more. It's just not smart. So we'll talk about that later, but as I always say, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne. Over and out.